Morning, ladies and gentlemen. This is Greg Mikulowski from FXDDs, and this is a Tuesday, April 6, 2010, New York opening Forex commentary. Overnight we did have some breaking news. In particular, the euro was pressured by Greek worries. Aussie rallied on the back of a stronger Reserve Bank of Australia interest rate increase. Well, they increased by a quarter to 4.25% to 4.25%, and also indicated that they may have to raise rates further. In addition, PIMCO, the big asset manager, had said that they would favor the emerging countries like the Australian dollar. Also, they favored Canadian dollar, which is of interest. Also, in the foreign exchange market, we saw the pound sterling come under pressure as Prime Minister Gordon Brown asked for an election for May 6th, and there was polls showing that uh, there may be a split parliament or a hung parliament as a result of the gap between the conservatives and the Labour is becoming closer than what was portrayed over the weekend. So all this contributed to moves in the currency pairs overnight. Let me remind everybody before we get into our technicals that we do have our online trading class today, Tuesday, April 6th at 4 p.m. You need to go to our website at forex.fxdd.com and click on this banner ad at the top in order to register. So let's head into the markets. We'll start off by taking a look at the euro. And the euro, we are looking at support against its 38.2% retracement level last night. We broke through that level and also broke through the 200-hour moving average on all the Greek situation news. That level came in at 134.49. That's going to be topside resistance in the process. We also went through the 134.37 level. What's the importance of that? Well, if you go to the daily chart and you look at the March 2nd low, 134.37 wasn't low at that point. So we put it in a horizontal line at 134.37. You can see how the market broke through that and then use that level as a level of resistance. This often happens. It gives the traders a second chance to sell the currency on a low risk opportunity at that level. So let's go to the 5-minute chart, put in a line around the 37 level, which is right there. You can see how the market sold off, went through that level right there, and held that level right there. We'll also show you how 134.50 was the. We'll put a line in at that level on our chart as well, a 5-minute chart, in order to remind ourselves that that is exactly where this green line is. That's a 200-hour moving average. As long as the price can remain below that confirming moving average, which is what we call it, then the market should remain negative. Also note on the 5-minute chart here is that the market is using this 100-bar moving average on the 5-minute chart as its resistance here, signifying that the market may be in a trend to the downside, or it has been in a trend to the downside. Indeed, it has. So that level comes in at 134.20. Traders are going to be eyeing that level. They're going to be eyeing the 37 level. They're going to be eyeing this 200-bar moving average, and hopefully keep in the process keep the bearish bias to the downside here for the euro versus U.S. dollar. So keep those levels in mind. On the downside, we do have support at 133.91. You can see how the market found a level there as well. It was an old level as well of support on this corrective move to the downside, and it just so happens to be this 61.8% retracement of the move. So there's going to be some good support down here at the 133.91. Indeed, we went down to a low of 133.99 already. So we are at a point now where the market has to make up its mind. Perhaps this trend is enough. If we break through that level, we should see lower levels in the euro versus the U.S. dollar. Let's go to the sterling versus U.S. dollar. I mentioned that also is under pressure. This is the hourly chart, and look how the market came down to the 100-hour moving average here. Paused at that level, have won, closed below that, closed above it, and then fell sharply at this point right here. The low from yesterday is 152.21. We also had this gap down to 152.05. So the market's initial move down kind of tested that level and then fell through. It broke through the 100-hour moving average at 152.27, then broke through the 152.05 level, broke through the lows from Friday, and off to the races down to the 38.2% retracement of this move up, this trend type move up that we saw the starting way back here on March 26 and extending to this high that occurred just on Friday at this level right here, 153.18. It actually occurred yesterday. So this support level at 151.19 will seem to have held. We found some buyers down there in the low 20s, and the market then started to move higher. Currently trading at 151.62. Now we do have resistance up at 151.81 off this hourly chart. Let's take a look at the 5-minute chart. to see if it's giving us any clues. And this too has been in a trend type move to the downside. You can see how the market gave you an opportunity to sell against the 100 bar moving average in this 5-minute chart at this point right here before moving sharply lower there. The bears got some added support by the fact that it held that level, and oftentimes that leads to the next leg to the downside here in the sterling versus US dollar. The next level of resistance up comes up here off this 5-minute chart at around the 152-ish type area. This level currently at 151.98 to be exact, and moving down. So we'll be looking for resistance as you can see the market is moving a little bit higher here in the early New York trade. We did see the Asian currencies get stronger. The won got stronger overnight, and so did the yen. We saw the continuation of the selling of the dollar yen. As a result, last night the market moved below or stay below the 94.34 level. This was a floor from we saw from the past 2 days. On Friday, we came down here, tested this level, and then we had a nice little floor there. Broke through the level, used it as resistance here, came up to the level, and then sold off here. We are below the 100-hour moving average, which should be bearish, but we did come down and test the 38.2% retracement right to the nose at 93.76. Seemed to have found support against there, so now we're in between the 93.93 level, which is the 100-hour moving average, and the 93.76 level, currently trading at 93.90. New York is going to decide which way it wants to go here. Do we want to move back above this 93.93 level, or we're going to move back below the 38.2% retracement with support down here at the 65-ish type area. You can see the lows and the highs there, or head toward this 50% retracement level, which is comes in at 93.44. You can see these lows and highs during this period, and the 50% retracement at 93.44. The 200 bar moving average way down below currently comes in at the 93.25. That also will be on the radar for that currency pair. Let's look at the dollar Swiss, seeing rebound in the dollar Swiss here today. In support of the stronger dollar, especially against the euro, especially against the sterling. Dollar Swiss tends to follow those currencies, and that's what we're seeing here. The market broke above finally broke above what was our goalpost range here. I don't want to use that one. I want to use this highlighted tool. You can see how the market traded in between the 100 and the 200-hour moving average for the longest time. Had a few little breaks to the upside right here and right here. Had couple breaks to the downside, but each time no momentum could be developed until today. We saw the market move from the 200 bar moving average and the 61.8% retracement to 106.29 and move sharply higher. So that's positive for that currency pair. We do have resistance, however, up against this high right here, and that's where the market is finding some congestive resistance and seeing some selling pressure in the dollar versus Swiss. Taking a look at the 5-minute chart, we are also using the 100 bar moving average as support. We'll be watching that at the 106.71 level. That's where the current 100 bar moving average in the 5-minute chart is located. I mentioned the dollar Canada. I also mentioned the Aussie versus US dollar, and the dollar Canada is down at the parity level currently as we speak. That's a key support level, obviously, for that currency pair. If we go to the daily chart and look at the last time the market was at this level, we did also find support down here at around the 78 to 91 level. Actually, this bar goes down to 73. This bar goes down to 77. So let's call this 73 to 91 area as a support level for the dollar versus Canada. That will be the next level to watch once the currency passes through the parity level. But right now we are seeing some congestion at that level. On the top side, we have resistance in the dollar versus Canada at the par 60 to 65 level. Those were the old lows for that currency pair. And I mentioned that the Aussie versus US dollar broke to the upside. We broke above this trend line at the 92.72 level and went up to test this high. This is the high from the month of March. That came in at 92.51. We have to break through that level in order to move to the next level, which would be 93.29, at least on the daily chart. On the hourly chart, you can see how the market paused at this 20-ish type level or 17 level was actually where the trend line came in off the daily chart, and the market used that level as a springboard to the upside. So there's going to be support back down here against the 92.17 to 20 level. This is Greg Michaelowski from FXDD.